All right, guys, welcome. I'm going live really quick today. I want to share with you guys some information on the Sacred account. I want to talk to you about how it works, why it's so important today with what's going on in the economy. So for those of you that don't know, my name's Jerry. I'm the owner of a company called DynamX. I'm in bad need of a haircut, as you can tell, but we're in quarantine right now, so that can't happen. But I want to share with you kind of what I've been doing with the Sacred account, how it works, how I've been using it with my clients. And I want to actually give you a visual illustration of how the Sacred account works and why it's so important right now. So check this out. The Sacred account, what is it? Very simple. It's a life insurance policy. Okay, it's a life insurance policy that I put money into, that I have my clients put money into as a savings vehicle to accumulate cash to then invest in income producing assets. Okay, so I'm going to break that down again. It's a life insurance policy that I put my income into. I contribute to it just like I would with a 401k or a savings account. Okay, and that money that I'm putting into it, I'm contributing for the purpose of accumulating it, meaning I'm saving, I'm trying to get to a certain amount. And then once I get to that certain amount, I'm going to then pull the money out and put it into income producing assets, things that pay me and are real. Okay, real estate, small businesses, private lending, things that actually have a value behind it and are going to pay me on a monthly basis. So that's what I'm investing in with the Sacred account. Now, with the economy right now, I want to check out what's been going on. Okay, so we have a lot happening, and I want to really focus on inflation. Okay, so we have a lot of stimulus stuff happening in the economy right now. Everyone just got their $1,200 today, over the last day, probably tomorrow as well. And that's fine and dandy, but the problem I've gone over is that because of the way that our monetary system works, that action increases future inflation. The value of the dollar goes down. Okay, and I want to actually illustrate this for you on the whiteboard. So just to give you an idea, if we look at inflation, back in, let's say, 1913, when we first brought the Federal Reserve banking system out, if you had a dollar in 1913, that same item that costed a dollar in 1913 today would cost you $26.07. Think about that. That's insane. Since 1913, if you had a dollar in 1913, a product that costed a dollar, let's say this mug of coffee cost me a dollar in 1913. That means that today in 2020, this mug of coffee would cost me $26.07. That blows my mind. That's nuts. So that's what has been happening. It's going to continue to happen because we have this system of printing out money, and it lowers the buying power of our currency. Bottom line, I don't want to get too into this part of it because I've talked about this a lot, but that is what's happening. So that's going to get even worse. Okay, we just printed out, what, $2 trillion? Like, we have more and more money going into the economy right now, and that's going to further lower the buying power of our dollars. And so it's important to factor that into how we invest and how we save. For those of us, most of us that save, we save with a bank account and we invest with a 401k. So we put our money in a bank account, we leave it there, and then we invest our money in a 401k, we leave it there till we're 60, right? Now, the problem is with a bank account is we're not making money on our deposits. Okay, when I put money in a bank, I might make, I think the national savings rate in banks is like 0.10%. So I'm making hardly anything, and it's probably going to go even lower. So the bank doesn't really help me accumulate. If I put money in a 401k, that money is now out of my control till I'm 60. Okay, it's invested in Wall Street, which we're going to see over the next 12 and 24 months. We're going to see Wall Street just fall apart. Okay, the idea of passive investing is not going to be a thing anymore. I watched a video with Ray Dalio. He owns a hedge fund. He's a billionaire. He said it is easier to qualify and place in the World Olympics than it is to be a market trader. Most people aren't doing that. They're not putting in the work of an Olympic athlete. They're putting in the work of a microwave dinner. Okay, so the stock market in the next 12 to 24 months is just going to completely fall apart. The financial system is going to end up being rebuilt. And so those of us that are sticking money in 401ks, that's not going to work for us either. So I need to look at, where can I put money where I get the compounding interest effect of a 401k, I get the growth and tax benefits of putting it in a retirement account, and I get the liquidity and access of a bank account. And the answer is the sacred account. So I want to show you guys how this works. I'm going to share my screen and I want to whiteboard this out for you today. All right, so check this out. We have the sacred account. Okay. When I put $1 into it, let me clear this off. If I put $1 into the sacred account, this dollar is going to turn into $2 at some point, meaning it's going to grow. So that $1 at some point along the line, it's going to turn into $2. Now, of this dollar, 30 cents of it equals death benefit. This is how the sacred account works. 30 cents of it equals a death benefit. This death benefit provides me a 3 to 5% tax-free compounding interest rate. We're just going to say compounding. Okay. Now, of this dollar, 70 cents of this equals my cash value. All right, so that's the basis. When I put $1 in the sacred account, this is what happens. 30 cents goes to buy my death benefit. That death benefit is a share of equity in the insurance company, and it grows my money at a 3 to 5% compounding growth rate or interest rate because I own it. Okay, that's the byproduct of me owning it. All right, now this 70 cents is cash value. I can borrow against this at 2 to 3%. That's my cost to borrow against that 70 cents. So check this out. If I put in $1, this is where it goes. If I borrow this 70 cents, I'm still going to be making this 3 to 5. Okay, and my dollar is still going to turn into $2 no matter what. It's going to happen. Now, when I borrow against this 70 cents, I'm going to go invest it in deals that make me 8 to 12%. So if we do the math on this, right? If we do the math on this, we say we're making 3 to 5, we're paying 2 to 3, and we're making 8 to 12. What does that come out to? It means that I stick $1 in, I borrow against the dollar. The dollar is going to turn into $2 whether I take it or don't take it. If I do take it, I can go make another 8 to 12. If I don't take it, it's going to turn into $2 anyways. That's the logic behind this. I'm leveraging my money here. I can take $1 and I can make 3 to 5 and simultaneously go make 8 to 12 on it. And my cost to do that is less than what I'm paying, less than what I'm earning inside the account. So I'm actually getting paid. I'm getting paid here between my 3 to 5 and my 2 to 3. That's the beauty of the sacred account. Now, the other aspect of this, there's so many things going on here. The other aspect of this is because I'm taking a loan when I access this money, it's not taxable. Think about any other investment. If I had any other investment and I made a 3 to 5% growth on it in a year and I pulled that money out, the IRS taxes it because it's considered a capital gain. It's growth. But what we arranged with the insurance company is I said, hey guys, I'm an equity shareholder in your company. Okay, I have $1 in here and I want to take my dollar out, but I don't want to pay taxes because you guys just paid me that 3 to 5%. So instead of taking my dollar out, let's leave mine in the account. I want to borrow $1 from you guys. We're going to use my account as collateral, meaning my money's going to stay in the account. That way I can A, avoid taxes because this is now not a taxable event. The IRS cannot tax a loan. B, my dollar still grows because it never left the account. And C, I'm going to go make more money with that money I've now borrowed. All along, my money's still going to grow. This is the simplicity of the sacred account. This is functionally how it works. Now, I want you to ask yourself a question. This is a question I asked myself many years ago when I understood this concept for the first time. If this was true, how many times would I want to deposit $1? How many times would I want to borrow against it to invest over here? And then how many times would I want to pay it back so that I could reuse it? And for me, the answer was as many times as I could, because the reality of this would be, if I was really able to do all this, if I was really able to make all of this happen, then what I would do with this account, it would look something like this. I would put the dollar in, right? I would pull it out. I'd repay it. I'd pull it out. I'd repay it. I'd pull it out. I'd repay it. And it'd be as many times as I could between now and when it was going to turn into $2, because I'm going to get the $2 anyways. So why wouldn't I go make 8 to 12 every single time on my borrows? Meanwhile, it's growing and I know it's going to turn into $2. Now, the beauty of this also is there's no stock market involved here. There's no volatility. This account doesn't lose money. Okay. So if we're in the economic climate we're in now, and I'm thinking about, all right, where do I place my money? My first natural instinct is cash. I'm like, oh man, I need to have money in cash. But what I don't realize is when I say that, I'm not accounting for inflation. Cash is actually on a balance sheet. Yes, it's considered an asset, meaning if you have cash, you can go buy things. But functionally speaking, because of inflation, cash is actually a liability, meaning it actually costs me money to have cash. It goes back to that example of if I had a dollar in 1913, I would need to have $26 in 2020. That's called a reduction in buying power. The fact that I now need $26 to buy the same thing a dollar used to buy. So when I hold cash, I am paying that cost of inflation to have cash. So that kind of cancels that out. I don't actually want to have cash when I think about that. I want to have something that's liquid, meaning I can pull against it like the sacred account, but it grows and it gives me the benefit of actually outpacing inflation, actually growing my money while I can still use it. Okay, now here's the other aspect of this. This is something almost no one talks about. I did my first sacred account 4 years ago. Okay, so 4 years ago. I now have like 4 of these things, but I had my first sacred account 4 years ago. So that was 2016. And I was putting in $1,000 per month. Okay, it's now 2020. Okay, if I'm putting in, let's say $1,000 per month in 2016, well, because of inflation over the last 4 years, that $1,000 that I'm putting in right now is only worth $887. You guys tracking with that? It means that my dollar buys less than it did 4 years ago because of inflation. So that $1,000 a month I've put in is only actually worth $887 today due to inflation. However, the way that the sacred account works is this. I'm locking in the purchasing power of when I started. So if I started in 2016 and I put in $1,000, like we said, that $1,000, 30% of it goes to my death benefit and 70% of it goes to my cash value. Okay, this is making me 3 to 5. This cash value I can borrow against and I can go make 8 to 12. Okay, now the buying power of this money, like I contractually locked in the purchasing power of the US dollar in 2016. What that means is when I put $1,000 in my sacred account, it's buying shares of death benefit. Okay, and those shares are producing. Those shares don't stay the same cost year by year. If I'm buying shares on a new policy this year, they're going to be more expensive than they were in 2016. However, because I started in 2016, I locked in the buying power of the US dollar with my sacred account in 2016's money, which means effectively I'm giving the insurance company, yes, it's $1,000 a month now, but it's only actually buying power of 887, but they're still giving me the $1,000 like I had in 2016. Guys, that's called inflation adjustment. It means that the dollar's going down in value, but I'm still getting the same purchasing power in my sacred account as if it were 2016. Why is this important right now? Why is this important right now? Because right now in 2020, we are going to have a reduction in buying power. Because of what's going on in the economy, we'll have reduced buying power. And if I don't want that to affect me, the best thing I can do is I could contractually lock in the buying power of the dollar today. Meaning if I signed up for a sacred account today, I would tell the insurance company I'm going to put in as little as literally $150 a month. You can just put your stimulus check into it if you wanted to. I'm going to put in my money today. I'm going to lock in the purchasing power of the US dollar today so that when the inflation starts taking off from all of this stuff we're doing in our economy right now, I'm unaffected. My money still purchases shares of my sacred account like it was 2020. In 2025, my dollar is going to be worth, let's see what it's going to be worth. In 2025, if I put in $1,000 right now, my dollar is only going to be worth 860 bucks. So I can wait till 2020 and be only able to buy $860 worth of sacred account, or I could do it now, lock in $1,000 or $150 or whatever my number is, and in 2025 have the buying power of what was 5 years ago that no one can get now. Okay, now here's the other factor I want to hit. We've had the sacred account for over 150 years, right? And that means that we've been around since the Civil War. We've been around through the creation of the Federal Reserve. We've been around since the Great Depression, both world wars, the 1950s recession. We've been around through the gold standard being gotten rid of in 1971, through the tech bubble, the 2008 crisis, and now. Okay, I hear this a lot from people. What if we have an economic reset and we change currencies? Okay, what if we have the dollar go away and we go to a new currency and everyone has to reset? Guys, that's already happened. Since the sacred account has been around, that's happened 4 times. Guess what? The sacred account made it through all 4 times, still paid dividends, still was profitable, and still didn't lose money. So when I'm looking at, like, with everything going on right now, market volatility, inflation, taxes, potentially changing currencies, all of this uncertainty, the thing I want to go to is the thing that I have the most certainty on, which is the sacred account. Okay, like I said, I could put it in my 401k. Problem is, that's only been around since the 1980s. I don't have a lot of certainty on that. Okay, I could put it in my bank. The problem is, the US dollar that we use has only been around since 1971. I don't have a lot of certainty on that. I could put it in gold and silver, which I do. Problem is, gold and silver is not going to be the same benefit on borrowing against and producing the dividend the way the sacred account does. Ideally, I have both. But what I'm telling you is, as far as a place to store cash, the sacred account is the place. It's been around longer than anything else. It's made it through literally 4 different currency changes. It's made it through the Great Depression, every single recession we've had since the Civil War. It is the only thing that allows you to leverage your money like I'm talking about right now. There's not another way to do this. It's the only thing that does this. So here's what I would be doing. First thing, if I have a stimulus check today, if I have 1,200 bucks that I just got, I'm going to put that into my sacred account. That's what I'm doing with that $1,200. Okay, because from there, I could pay off debt, I could invest, I could put it into my personal development, I could borrow against it and buy gold and silver. What I'm guaranteeing, we'll do this with real numbers now. What I'm guaranteeing is, if I have 1,200 bucks, I'm guaranteeing that 1,200 is going to at some point turn into 2,400. And while it does that, I'm going to borrow against it, and I'm going to go earn 8 to 12% in deals and pay myself back, and borrow against it and pay myself back. And I'm going to do that as many times as I can between now and when it turns into 2,400. Guys, that's called, and this is going to be nerd speak for you, but that's called monetary velocity. Monetary velocity. How quickly can I transact money? Okay, now the problem with monetary velocity is that if I'm transacting with other people, it means I'm losing the money. I'm having to give it away. But what I'm saying is, I'm transacting with myself. I make money here and I make money here. I make money here and I make money here. Every time I borrow, I make money. Every time I repay myself, I make money. I want to do that with a great frequency, as many times as I possibly can. Okay, so guys, bottom line, that's how the sacred account works. I want to share that with you because I know a lot of us got 1,200 bucks today. Like I said, you can do a sacred account with as little as 150 a month. That's 1,800 for the year. That's pretty much covered by what you just got today. Okay, the bigger crisis than any of the pandemic stuff going on, any of the stock market stuff going on, any of the job losses going on, the bigger problem is that Americans did not save money. Americans did not follow sound financial principles. And the money that we did have, we gave to financial institutions that basically can't help us right now. If I gave all my money to the mortgage company, they can't help me. Okay, if I gave all of my money to Wall Street right now, they can't help me. If I gave all my money to my bank, they can't help me. If I gave all my money to my credit card company, they can't help me. So the American takes their paycheck and gives it to all of these financial institutions. And then when something like this happens, we don't have anything. We don't have, like all of us should have 3 to 6 months of income saved in the bank. Imagine where you'd be if you had 3 to 6 months saved right now. Like this whole coronavirus thing would feel more almost like a vacation. You'd be like, man, I don't have to work. My bills are covered. I get to stay home and relax, and I don't have to worry about my income because I've got money put away. Right? So that's the message that I'm preaching. This is what I'm sharing with you guys. If you're watching this right now and you would like to learn more about the Sacred Account, you can reach out to me directly. You can also go to www.sacredaccount.com. And that's going to give you more information on the Sacred Account. Like I said, reach out to me directly. I would be happy to hop on a call with you. Nano Aquino would as well. He's one of my guys. We'd be happy to answer your questions. Make sure that you have all of the information you need on where you're putting your money, because at the end of the day, you're going to put it somewhere. This is where I want to wrap up. At the end of the day, you're going to put it somewhere. It's not going to go nowhere. You're either going to spend it or get rid of it, or if you save it, you're going to give it to a bank, or you're going to put it in a retirement plan. And I'm telling you that those are not good options, and this is a better place to put it. And if that's true, isn't it worth exploring? Doesn't cost you anything to get your questions answered. It does cost you potential if you're skeptical, or if you're stuck in your ways, or if you don't want to be educated on finances to learn how this stuff works, because really it's not that complex. It's very simple. So guys, thank you for watching. Make sure that you share this video. Reach out to me if you need help right now. Enjoy your day. I'll talk to y'all soon.